This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Bashardis. Thanks for joining us at XM.com. Wall Street ended Friday in a euphoric mood as second quarter earnings continued to beat expectations, but trading has gotten off to a much more cautious start on Monday, with the Fed meeting high on investors' agenda. All three leading indices finished the week in record territory. The earnings season continues in earnest this week, as all the big tech names are due to report, starting with Tesla today, followed by Apple, Microsoft, and Alphabet tomorrow. Nasdaq futures were outperforming on Monday, standing flat in early European trading amid strong optimism about tech earnings. But Dow Jones and S&P 500 futures were tracking the broader markets lower. Worries about rising virus cases around the world and the subsequent toll on economic growth were heightened on Monday. Even the United States is seeing a fresh spike, not just in infections, but in hospitalizations as well, as the vaccination pace has ground to a halt lately. Further roiling markets today are more signs of a regulatory crackdown in China on locally listed tech companies. But the intervention is now widening to the education and property sectors, sending shares in Hong Kong and China into a spin. The question now is whether the worsening outbreak of the Delta variant will eventually catch up with Wall Street. The Fed meets on Tuesday and Wednesday to deliberate on how soon its bond purchases should be dialed back. Although it's unlikely policymakers will explicitly flag a tapering decision just yet, investors will be anxious to see how much further progress the Fed thinks has been achieved since the last meeting and whether the rampant spread of the Delta variant has affected the outlook. Judging by which way Treasury yields were headed on Monday, the market doesn't seem to be betting on a hawkish surprise. The downside reversal in yields lifted gold, which is advancing above the $1,800 per ounce level amid growth jitters as well as brewing Sino-US tensions. The dampened outlook weighed on oil prices but boosted the Japanese yen and to a lesser extent the Swiss franc. The US dollar, however, was marginally down on the day on a firmer euro and pound. But the commodity-linked dollars were all weaker on Monday, led by the Aussie. This is today's Daily Market Comment. Thanks for joining us at XM.com.